Ethereum is by far one of the best assets in cryptocurrency, and personally it makes up the majority of my portfolio. But the thing is, I'm not just buying and holding Ethereum on my wallet, I'm buying, holding, and staking my Ethereum to actually earn an additional yield of upwards near 10%. Now this video is going to show you my exact strategy and how I'm earning over 10% every single year on my Ethereum tokens and why Ethereum actually makes up for the majority of my portfolio. The first thing I want to take a look at is the overall crypto market. As you can see, Ethereum is the second largest crypto asset out there with the market cap of over $161 billion. To compare that to Bitcoin, that's about half of what Bitcoin has at about $334 billion. Now I want you to pay attention to this chart. The blue line represents Bitcoin dominance over the overall crypto market, and this purple line right here represents Ethereum dominance over the overall crypto market. If you zoom out and look at this chart since 2013, you can see that Bitcoin dominance has continued to fall against the market while Ethereum dominance has continued to go up against the market. That shows that a lot of people are actually switching from Bitcoin to Ethereum because Ethereum has more utility than Bitcoin. And granted, I always think Bitcoin is going to be a top cryptocurrency, whether it's number 1 or number 2. But the thing is, Bitcoin is known as digital gold. It's a store of value asset, whereas Ethereum actually has real usability and utility. The Ethereum network allows people to create their own decentralized applications and their own tokens. It also hosts a variety of different NFTs, meaning as other altcoins grow and as the NFT market grows, Ethereum is going to continue to grow as well. And that's exactly why I'm a long-term believer on Ethereum, and I do think that it does have the potential to go past $10,000 eventually. But I also believe that if you're just buying and holding cryptocurrency, you might as well hold that money in your bank because you're doing the same exact thing as if it was sitting in your bank account. You're not putting it to work, and that's because cryptocurrency was meant to be a virtual currency, not an investment. So when you're buying Ethereum, another currency, and just holding it, you're doing the same thing as if it was just sitting in your bank, not collecting yield. So that's exactly why you need to be staking your Ethereum or depositing it into liquidity pools. So right now, I'm going to show you a few different liquidity pools and staking options for Ethereum that I personally use. And of course, I found these DeFi applications using the strategy that I actually posted for free in this DeFi report. That report will be down below in the description if you want to check it out and find projects just like the ones I'm about to show you. Hopping into it, the first one is Frax Finance. Frax Finance has their own stablecoin known as Frax, and it's a very popular stablecoin with billions of dollars locked up in it. Now, Frax Finance is known as the first fractional stablecoin, basically meaning that it's backed partially by collateral, and then it's also algorithmically pegged to the $1 price. So it's almost a mix of an algorithmic pegged stablecoin and a collateralized stablecoin. Now with that being said, I don't have much portfolio exposure to the actual Frax Finance stablecoin itself simply due to this fact. And that's because I only want to invest into stablecoins that are 100% collateralized. But the thing is, Frax Finance also offers something called FRX ETH, also known as Frax Ethereum. Essentially, you can go and swap one Ethereum for Frax Ethereum 1-to-1, basically meaning that this is a fully backed and collateralized asset. And of course, you can go and stake your Frax Ethereum through the Frax website and actually earn up to a 7.7% annual yield. Keep in mind, this is a real yield, so it's going to fluctuate over time. This is just the average that they have done so far. And when you do stake your Frax Ethereum, you're going to get something called SFRX Ethereum, also known as Staked Frax Ethereum. Now, how these staking rewards are paid out is by the price of Staked Frax Ethereum token actually going up in value. So that means that Staked Frax Ethereum token is going to always be trading above Frax Ethereum, which Frax Ethereum is pegged to Ethereum. Obviously, there are a lot of benefits to this. One of them could be potential tax reasons. And that's because usually long-term capital gains are taxed at a lower rate than ordinary income. And of course, if you do get staking rewards in the United States, that is taxed as ordinary income. I'm not a CPA, but that's my personal experience with cryptocurrency taxes so far. So in theory, if you do hold staked Frax Ethereum for the long term and over a year, you might actually end up paying less taxes because you're taxed at a long-term capital gain rate. Looking at the documentation, it says Frax Ethereum acts as a stablecoin loosely pegged to Ethereum, so that one Frax Ethereum always represents one Ethereum. And of course, the amount of Frax Ethereum in circulation matches the amount of Ethereum in the Frax Ethereum ecosystem reserves. So this is them saying that Frax Ethereum is backed 1-to-1 with Ethereum in the reserves. And staked Frax Ethereum is an ERC 4626 vault designed to occur the staking yield of the Frax ETH validators. So for all of you that are wondering where exactly did they get this 7.7% from, well, that comes from them actually staking Ethereum on the proof of stake network. So as said, this is a 100% real yield, and it is not paid out in reward tokens like most projects do. With that being said, you can see I currently have 3.94 staked Frax Ethereum, which is equal to 4 Ethereum. But of course, that's at current price, and as the price of staked Frax Ethereum continues to go up against Frax Ethereum, I'm going to continue to get more Ethereum out of this. Now, Frax Finance has a TVL of over $1.29 billion, in which pretty much all of that is on the Ethereum network. Another thing I want to mention about Frax Finance is that Convex, which is a very large yield aggregator, actually offers Frax vaults to allow you to get an additional yield. So if you were to just swap your Ethereum for Frax Ethereum and not stake it on Frax Finance, you can actually pair Frax Ethereum with the normal Ethereum token on Convex and deposit it into this vault and get a 10.46% yield. But of course, you do have to realize that a portion of this is paid out in reward tokens, which means that it is not a real yield. But at the same time, Curve token as well as Convex token are known to follow the overall crypto market and whatever Ethereum and Bitcoin are doing. Convex Finance has over $3 billion locked up in it, and it is a very reputable platform. But of course, this goes for Frax and Convex both. Anything can happen in DeFi, and you never know when a platform is going to collapse. But personally, I haven't had any bad experiences with these. Another way that you can actually stake your Ethereum and actually earn a decent yield is through Lido liquid staking. Lido supports staking for Ethereum, Solana, Polygon, Polkadot, and Kusama network, but of course, we're going to be taking a look at Ethereum. So currently, there's a 4.8% APR right here, so obviously not nearly as good as Frax Finance. That's why I hold the majority on Frax Finance. Now, before we go any further, if you are trying to build up your long-term investing portfolio, I really recommend using Mumu, where you can get up to 15 free stocks and up to $60,000 in sweepstakes using my affiliate link by signing up and making a deposit over 1 cent. Of course, my affiliate link is going to be down below in the description, but I actually hold my stocks on Mumu as opposed to Robinhood and Webull and other apps like that. The thing about Lido is when you do deposit Ethereum into their vaults, you can't withdraw it directly from Lido. They stayed in their FAQ while there's no way to withdraw Ethereum from staking until withdrawals are enabled on the Ethereum beacon chain. Staked ETH holders can exchange their staked ETH for Ethereum on decentralized exchanges. So that basically means that there are liquidity pools for staked Ethereum to Ethereum to actually swap your staked Ethereum back to normal Ethereum if you want to get out. But once again, I believe that these are long-term plays, so you shouldn't just be going in and out and in and out. But the concept's very similar to Frax Finance. Whenever you deposit Ethereum, you're going to get the same amount of staked Ethereum in return. So if I deposit 10 Ethereum, then I'm going to get 10 staked Ethereum tokens, and my rewards will be claimable through the Lido app. But of course, if we want to use a similar situation to Lido Finance, where the price actually goes up and up and up, and we get a capital gain as opposed to ordinary income, we can actually wrap our staked Ethereum to wrap stake Ethereum. Now this chart right here is the chart of staked Ethereum, which is pegged to the Ethereum price. And this chart right here is the chart of wrap stake Ethereum, which pretty much is pegged to staked Ethereum, and then there's the additional yield on top of that price. So if you compare these charts, you can see that they move the exact same, except wrap stake Ethereum is a higher price, and that's simply due to the fact that the yield is occurred in the price as opposed to being paid out to you. Now if you look right here, you can see that I currently have 2.738 wrap stake Ethereum, which is equivalent to just about 3 Ethereum tokens. Now there's one last thing I want to mention about my personal strategy. As I said, I'm a long-term believer in Ethereum. I believe that Ethereum is going to go to $10,000 eventually. So right now, while I might only be earning about a few hundred to a few $1,000s every single year off of staking my Ethereum tokens, which is not a lot, in the very long term, when Ethereum does go to $10,000, all those rewards that I occurred are going to be worth a lot more money. And that's exactly why I'm not selling any of my rewards. I'm not holding them. I'm simply holding wrap stake Ethereum as well as staked Frax Ethereum. And that's because those rewards are not paid out to me. Those rewards are occurred in the actual price of the asset. Obviously, do what's best for you, but I'm just sharing my journey and what I'm actually doing with my Ethereum tokens. If you enjoyed, drop a like, subscribe, notifications turned on. Hope to see you guys in tomorrow's video. Peace.